Your guide to REITs. Earning like a real estate mogul without the hassle. Hey everyone, have you ever dreamed of owning a slice of that fancy new apartment building downtown? Or maybe a shopping mall teeming with activity? Well, what if I told you there's a way to get involved in real estate without the hefty down payment, repairs, and late-night tenant calls? That's where REITs come in. What are REITs? Imagine a company that owns a collection of income-generating properties like apartments, offices, or even shopping centers. These companies are called REITs, or real estate investment trusts. Instead of buying a whole building yourself, you invest in a pool of these properties through REIT shares, similar to buying stocks. There are two main types of REITs: equity REITs. These guys directly own and operate the properties, so their income comes from rent payments. Think of them as the landlords of the REIT world. 2. Mortgage REITs, REITs. Instead of owning buildings, REITs invest in mortgages and other real estate loans. They earn money from the interest payments on these loans. Imagine them as the bankers of the REIT world. Why consider REITs? REITs offer several advantages for investors. 1. Diversification. Adding REITs to your portfolio lets you tap into the real estate market without the high costs and risks of buying individual properties. It's like spreading your eggs across different baskets. 2. Passive income. Many REITs pay regular dividends, providing a steady stream of cash flow. Think of it as a paycheck from your real estate holdings, minus the maintenance headaches. 3. Liquidity. REITs trade on stock exchanges like other stocks, so you can easily buy and sell shares when needed. Need some quick cash? No problem, just sell your REIT shares. 4. Professional management. REITs are run by experienced professionals who handle the day-to-day operations of the properties. You don't have to worry about fixing leaky faucets or dealing with difficult tenants. The power of REITs? Building wealth over time. Here's why REITs can be a powerful addition to your portfolio. 1. Historically strong returns. According to the National Association of Real Estate Investment Trusts, NAREIT, over the long term, REITs have delivered total returns, including dividends and capital appreciation, that outperform the S&P 500. For example, from 1972 through 2023, year-to-date, the Equity Rate Index, MSCI US REIT Index, has delivered an average annual total return of 11.83%, compared to 10.51% for the S&P 500. 1. This means REITs have the potential to grow your wealth faster over time. 2. Passive income stream. REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. This can provide a steady stream of income, like clockwork. Imagine receiving regular checks from your real estate investments, perfect for retirees or anyone seeking income generation. Let's say you invest $10,000 in an equity REIT that offers a 5% dividend yield. Annually, you could receive $500 in dividends without considering reinvestment of dividends. Over time, if the REIT's share price also appreciates, your total return could be even higher. Are REITs right for you? Of course, no investment is perfect. Here are some things to keep in mind. 1. Market volatility. Like any stock, REIT share prices can fluctuate with the overall market. Just because real estate is hot today doesn't mean REITs will always be on fire. 2. Interest rate. Sensitivity. Equity REITs can be affected by interest rates. Rising rates can make it more expensive for them to finance properties, potentially impacting their profits. 3. Property value fluctuations. The value of the underlying real estate owned by the REIT can affect its share price. If the value of the properties goes down, so might the price of your REIT shares. 4. Management. Risk. The performance of a REIT depends heavily on the quality of its management team. Do your research to choose well-managed REITs with a solid track record. The takeaway: REITs for long-term goals and strategic investing. REITs can be a valuable tool for building wealth over the long term. They offer diversification, the potential for strong returns, and a steady stream of passive income. However, it's important to understand the risks involved and choose REITs that align with your investment goals and risk tolerance. Here are some key takeaways. 1. Consider REITs as a way to participate in the real estate market without the hassle of direct property ownership. 2. REITs can provide a good balance of potential growth through capital appreciation and income generation through dividends. 3. Focus on a long-term investment horizon to weather potential market fluctuations. 4. Conduct thorough research to choose REITs with a strong track record, experienced management, and a diversified portfolio of properties. Please subscribe and like. Also, let me know which other topics you would be interested in learning. Remember, this is not financial advice. Always do your own research and consult with a financial advisor before making any investment decisions.